Good afternoon, everyone. My name is Richard Engberg, and I'm an equity research analyst here at Erik Bank with focus on tech. With me, I have Jesper Sørgaard, CEO of Better Collective. Jesper, welcome.
Thank you very much.
So, the scene is yours.
All right, thank you very much, and let's get started. So just quickly on the agenda of today, I'm going to introduce Better Collective to those not familiar with the company, and then on the back of that, I'm going to run through our Q3 highlights. And finally, there'll be a Q&A session, so definitely please shoot some questions at the end. And my name is Jesper Sørgaard, and I'm the co-founder and CEO of Better Collective. And Better Collective is, we're incorporated in Denmark, and we also headquartered in Denmark, in Copenhagen. But actually today we have offices across Europe, and we have also made the transition to the States, where in recent years the American market has become very important to our business. As a founder and with my co-founder, we also own a significant part of the company, and combined with the board of directors and the rest of the management, we actually have an inside ownership of more than 42%. We are close to 1,000 employees in the group, and as you can see, we were founded in 2004 and listed the company in 2018. I'll go to the next slide. And just to give a sense of the brands we operate, and I'll come back to, in particular, how our business model works. We own some very big sports brand and sports betting related brands in both the US, but also globally and in local markets in Europe. If we start with the US, we have acquired what was the market leader at the time, Action Network, which is a very strong app and retention tool for users of sports books, where they basically can track their bets and find a lot of engaging content related to tips and what their friends in the Action app are sharing of tips. We also have RotoGrinders, which has a focus on daily fantasy sport, which is a leading community where you can find tools in order to create your lineups for the daily fantasy competitions. And then lastly, we also have Vegas Insider, really a legacy brand in the sports betting market in the US. This year it rounded 25 years of operation, and it has a big community of people very passionate about sports betting coming there to find odds and, in particular, expert advice on all the US sports. In aggregate, we have more than 20 million monthly visits to these platforms, so we engage with a pretty significant part of people in the US that are interested in sports betting. If we then go to our Europe and rest of the world business, as I said, we have local brands in most of the European markets, and also in recent years, LATAM has been a market where we have seen a bigger focus and also very good traction in our business. Just to name a few of our brands, like we have the leading German brands of Wettbasis, both news and community site for the German sports betting market. In Denmark, we have Spilleksperten as the leading brand, and in the Greek market, we have Betteratis. And I said in most of the European markets, we have sites similar to this that are market leaders in the local niche of sports betting content and communities. In aggregate, these sites have more than 10 million monthly visits. Then the last part of our owned and operated brands, we have the global brands. Betting Expert being one of the first websites we operated in Better Collective, which is the leading global tipster community. Basically, people sharing their advice and the majority of users coming to be inspired as what to bet on. Then within esports, we have added HLTV and Futbin in recent years. Very big and market-leading platforms and media sites within their games. So HLTV caters to Counter-Strike, CSGO, where it's the leading news and community site. It also hosts what is considered to be the world ranking, the recognized world ranking of teams and players. So every year we award the best player of the year in Counter-Strike. Futbin is the leading community site for people interested in the game of in FIFA, FIFA Ultimate Team, where the users they use Futbin in order to find prices for the different FIFA cards and basically get insights as how to trade those cards. And we have a very big and very engaged audience on Futbin. And as you can see, we have a very big global audience coming to these sites, more than 100 million monthly visits. If we then dive into the type of traffic we have with these sites, if we start at the top part of this slide, we have owned media and paid media. So let me start with owned. That was the local sports site I just described, where we have a targeted audience coming for betting knowledge, wanting tips and advice. Well, ultimately, we can deliver those customers to the sports books where they register, and then afterwards they'll come back to find tips and again be inspired as what to bet of. That gives high quality users to our customers, the sports books, where we predominantly work on revenue share models in order to take part in the lifetime value of these players. It's more or less the same with the paid media side of this segment, where we buy users either from Google AdWords, or it can be Twitter advertising, Facebook advertising, but where we have a direct cost associated with acquiring a user to one of our sports media sites. Again, a qualified user that we then send to the customers. If we go to the next part of our own media, the esports community, it's basically an ad model that we have in place. So we sell ads to big companies that are seeking to hit that exact demographic that you get with esports, meaning predominantly young and predominantly male audience. And therefore, since it's such a big audience we have and a very specific demographic, we can deliver quality ads and charge premium CPMs on that kind of traffic. Finally, we have what is not owned and operated, meaning that we don't own the website, but we make partnerships with them, and that's traditional media sites such as the New York Post, the Telegraph, in Germany, Sports 1. So very established and renowned media brands where we manage the section on sports betting and basically deliver content co-branded with, as an example, Betting Expert or Action Network, and handle all of the content creation, monetization with the media partner, and basically they send them a check at the end of the month, and we split the revenue. So moving to I would say the development that we've gone through, and also what I believe sets us apart from the peers in our industry, is that in the early days of affiliation, it was very much about getting traffic, directing that traffic immediately to a place where a transaction could happen, and then you wouldn't particularly engage with the traffic afterwards. And mostly that would also be delivered on a CPA model, where you get a one-time payment for delivering a new customer. As opposed to that, we have on our side, as mentioned, qualified traffic that is returning to our sites, often case on a daily basis. We still refer the players, but we work predominantly on revenue share in order to take part in the added value that we deliver to the users over time. We also have developed products, as I mentioned, with the Action Network app, where we sync bets on behalf of users across bookmakers. We're also able to deep link with sports books. So in essence, here we are able to charge both the revenue share, but also an activity-based fee, depending on the bet volume in the app. And finally, we have the media and content as explained with the esports community, where we have this very, very engaged group of users, where both for Futbin and HLTV, it's the go-to place on a daily basis for millions of users. Here we sell sponsorships, we have CPM rates, and we sell both to endemic and non-endemic, meaning so we are both selling ads to sports books, but we also sell to Ford and the likes of that. Just quickly on the journey we've been through in recent years with Better Collective. So a big part of the journey for the last 6 years has been a consolidation that we have been leading in the sports betting sector on the content side and media side. We launched that strategy in 2017, and it was actually what drove the decision to list the company on NASDAQ in 2018, where we raised 65 million euros of primary capital, so we could continue to acquire businesses. And I think we've really been smart in the way we've raised equity, but at the same time blended it with the debt, very cheap bank debt, meaning that we've really been able to leverage the cash flow we have and grow and acquire the business in an optimal way from a capital allocation perspective. Just pointing to 2019, where we, for the first time, made an acquisition in the US. And I think worth noting here is that in 2018, the American market was basically non-existent. And in recent years, that has been a very big part of our growth. Also worth mentioning the resilience in a business. We really saw the big test of our business during COVID-19. When all sports stopped, it of course affected us significantly, but we could quickly adapt the business, bring down cost, and then as soon as sports picked up again, we saw growth coming back, and we basically had a leaner business and could utilize the momentum we got with that. 21, the acquisition of Action Network, and then finally this year, we've seen very strong development in LATAM, and as mentioned, the media partnerships. The guidance for 2022 is 20 to 30% organic growth and an EBITDA of approximately 85 million euros. We have a US estimate, which we gave when we acquired Action Network, of delivering more than $100 million this year. Okay, just reconnecting with the app to flip next slide. There we go. Here you see the tombstones on all the brands we have acquired over the years. And I think to sort of boil it down, what have we learned and what have been the development? Basically, in the early phase of this consolidation, we acquired many smaller brands that were good business cases, but not really adding a lot of strategic development or from a financial point of view, moving the needle. So the trend has been for us to make larger acquisitions, and most cases with a very special strategic element. The move into esports, as an example, at Temi in 2020, adding the paid media to our business, and looking ahead, like the kind of acquisitions we expect will fit that profile. It should be strategic and often case also with significant size. And again, reconnecting with the app. There we go. So just a few of the partnerships we have in place. I spoke to the media partnerships. Here you see, as mentioned, the Daily Telegraph, New York Post. We also have the Philadelphia Inquirer, Chicago Tribune in the States, and Boston.com also in the States. We have, as mentioned, Sport1, and then we have a number of undisclosed media partnerships. But in general, media partnerships have a big focus for us. We have seen significant traction since we launched that new business unit in the summer of 2019. And we've also then on the sports side made a collaboration with the NBA, PGA, and NASCAR, often case content partnerships and data partnerships with the sports leagues. Okay, let's then take a look at this most recent quarter that we've reported on today. It was another great quarter for Better Collective. In particular, Europe and rest of the world saw very strong performance. LATAM in particular, where we have seen high growth, both from the perspective of delivering a lot of new depositing customers to the sports books, but also in actual terms of revenue from the revenue share accounts we have. The same goes for the media partnerships we have. In the US, the Q3 is a bit special because the first 2 months of that quarter are low season, and this year compared to last year, it was even worse because last year, due to COVID, we had actually NBA ongoing in Q3 and also NHL. It was not the case this quarter, so July and August were not particularly exciting, but then we saw a big lift in September with the start of the NFL. We've also made a strategic move in the US where with several partners, we have stopped the CPA collaboration, and now we work on revenue share agreements with them. It means a short-term dampening effect, and to give a concrete example of the effect of that, we have one good partner in the US where we saw in September $2 million of revenue that we could have realized had we been working on CPA, but due to revenue share, we're not seeing a lot of revenue, but we will see that in the coming quarters by the players sent. Fundamentally, we're very excited about this development as we believe aligning ourselves with the sports books for the long term and tapping into the lifetime value of these players is really in the interest of all parties, and we see a higher value of each individual players by doing so. If I continue on the revenue share part for the full group, we saw a record of 25 million euros in revenue share revenue for this quarter. It's a significant record, and it's up 73% year on year. And that essentially means that we have higher quality in the earnings that we see in Better Collective, and something where we expect continued growth in coming quarters. There's been a lot of concern globally and for good reason about the macro environment. We're happy to say that we haven't seen any visible impact by this. Again, we have a resilient business. It's obviously not immune, but so far it hasn't affected us a lot. And then what we are looking into now is a very action-packed Q4. And finally, we stated also that the financial targets for this year are maintained. And the financials, so 32% growth for the quarter, of which 23% was organic growth. I did speak already to the revenue share development, and you see the bars here. It's really significant growth we've experienced. A small growth in the EBITDA. And a pretty good growth for our cash flow in the quarter. Again, I want to remind that Q3 is a low season quarter for Better Collective, and as mentioned, we expect high activity in Q4. And we actually gave sort of a signal to what we expect for this quarter by releasing the October revenue figure of 26 million euros. It's a growth of more than 50% year on year. And sort of what is driving the action-packed quarter is both the FIFA World Cup, but also due to that tournament, a condensed soccer schedule. So we've been preparing for that. So we feel we are ready for the activity. And then a bit special with Futbin in the esports world. The new FIFA game was released just at the end of September, meaning that the high activity happens in Q4. So the seasonality for that business is that Q4 is the best performing quarter. So all in all, a lot of activity across the board in Better Collective for this business. And that basically brings me to the end of this presentation. So I'll open up for questions from the audience.
Excellent. Thank you, Jesper. And my first question is related to the US. I've been following some of the US operators in the last couple of months, and they say that they have seen a decrease in customer acquisition costs. Have this started to affect you, and what have you noticed?
Yes, we have seen sort of that development. And one thing is actually when you work on revenue share, you don't have immediate cost. Like now I'm speaking from the sportsbook's perspective, they don't have immediate cost with the player acquisition. So that will drive down the cost of acquiring new players short term. So that is actually what we also experience in the conversation with the sportsbooks, that they are engaging with the revenue share agreements that we would like to work on. We have also seen, especially in the last 6 months, a bigger focus on profitability for the sportsbooks. So there's no doubt that has been a focus. So that is driving the revenue share agreements. We have also seen lower spend on direct ad spend. And I think I would probably mention New York, the state of New York there, where there's a very high taxation. And that has led to some sportsbooks pulling back. What we experienced with New York was that in Q1, we had the launch of that state in January. And there was really a spending spree ongoing from all sportsbooks. We benefited a lot from that and had a very strong quarter in Q1 with the combination of a lot of new depositing customers from New York plus CPA effect, which we predominantly worked on at the time. So New York has been more steady this quarter. And overall, there's no doubt, I think the sportsbook are assessing the marketing spend. I think long term, that's good news for us because we are one of the most efficient and attractive channels of acquisition for them. So it's basically sort of playing in our favor, I would argue.
Okay, great. And my next question is, you mentioned it in the presentation, and today we have quite a lot of affiliates presenting here at Erik Penser Bank. But if you could just state the 3 key points that makes you differentiate from the other affiliates on the stock exchange.
I think it's the brands that we own. And it has been a focus of ours that we want to be independent from Google and basically independent from traffic sources and own the loyalty of the users. And in order to do so, you need brand, you need best-in-class content, and over the years we have really acquired both in local markets these strong brands that are market leaders, but also from a global perspective we have made these acquisitions. So I think that is what really makes us unique, and we can then align our business models with that behavior in the audience. And specifically to Google, we of course we welcome and we're happy to rank well in Google and drive traffic from that. But we focus on developing brands where Google's traffic will not be like sort of what we depend on 100%, but more and nice opportunity to us that we already have a lot of traffic coming directly to our sites. But by developing the sites even further, Google will also reward us in the long term, because Google in general tends to favor big brands as they deliver authority.
Okay, great.
So, and just sort of to round off that brand point, the kind of products I spoke a lot about the Action Network app. That kind of product is really about retention. So we're also a way for the sportsbooks to retain the users, to keep them active, and ultimately actually increase the activity of the players.
Okay, great. And you have made quite a large number of acquisitions. Can you please describe what you are looking for in acquisitions? And have you noticed any change in valuations when you acquired during the years?
Yeah. So what are we looking for? I think to put it in one word, it's sustainability. meaning that we want to own businesses that we believe are sustainable for the long term of this industry. And what does that mean? It means that we should have comfort in the traffic that the website has. So when we assess a potential acquisition, we are looking at measures such as the direct traffic to the site. How high is that percentage? The higher, the better. We also care a lot about the engagement of the audience, meaning how much time do they spend on the site, how many pages do they visit. So that is guiding our acquisitions when we look at these brands, because we want to make sure we buy a business that will be in an even better shape 5 years from today. If we then go to sort of the valuations that we see in the market, I think there are not that many transactions happening right now, and it's probably a result of many of these businesses. They are asset light, they're cash flow positive, meaning they are not in any form of distress, so they're not forced sellers. And in a market where in general you see valuations coming down, it's less tempting for sellers to put the business up for sale. Having said that, there can be companies where they must sell, and then the climate is of course in the favor of the buyer. And right now we as always work with the pipeline and have numerous conversations ongoing. To the timing of that, if it will materialize, it's much harder to predict. But I think if we are to strike now, it would probably be a result of then valuation reflecting where we are in the current economic climate.
Okay, great. And you're active in the US, you're active in Europe, you're active in Latin America. Can you please describe how these markets differentiate from each other, how the player behavior is different, etc.?
Yes. So in general, and that goes for all markets, you have sort of a cycle where when it's sort of the early phase of a market, there's a very, very big focus on player acquisition, meaning that the sportsbooks, they are looking for customers as the market has just launched. So it's very much a land grab where we, of course, want to be the ones sending as many players as possible. The next phase, as it enters sort of not a mature phase, but starting to mature, is a focus on the quality of the players, the retention of the players. So the quality of products will over time become more important in a market. And again, coming back to having a sustainable business, that is a key focus area of ours. If I then should speak to player values, obviously there is a correlation between the BNP per capita and then the value of players. But having said that, I think there is a distinct difference from, as an example, European players and the American players. Where American consumers, they are so engaged with sports 24/7. So what we see both in CPA rates and based on data from revenue share agreements is that there's a significant higher value of American sports betting customers than what you see in Europe and definitely also compared to Latin America. So those are probably the different dynamics that I would highlight.
Great. And lastly, I have asked the same question to everyone participating today. First one is, how are you preparing for the World Cup? And the second question, I guess I know the answer to, since you're Danish. Who is best going to win the World Cup for you?
Well, so on the preparation part, it's across the entire business. You know, even in the US, we've prepared a lot for the World Cup. Soccer is not the number one sport of choice in the US, but we do expect still a big interest in the US. So it's across all the platforms we have prepared. We've even produced small documentaries related to the World Cup, and podcasts. So we have a lot of high quality content in various formats that is focused on the World Cup. And both from a personal and a business perspective, I would very much like to see Denmark win the World Cup.
Okay, great. Jesper, thank you for taking time speaking to us here at Erik Penser Bank, and thank you everyone for listening.
Thank you. My pleasure.
Fokus på digital underhållning och sport.